One thing when you and I try to stand for delivery and even take something off of COMEX, it's another thing when you are seeing billions of dollars worth come off the exchanges every month, when you're seeing the biggest money in the world, who is not only the biggest money, they're the most well-informed traders on the planet in what is a very sophisticated endeavor, and that is to drain the world's exchanges. It's just beginning. I do believe silver will go on a run, a slingshot run, that will surprise even silver bulls, especially when you compare it to gold's performance. It's following suit just the way it normally does. Gold leads the way. Silver slingshots past it on a performance basis. And if we close above $41 an ounce, I mean, the sky's the limit. There's virtually nothing between it and 50. You get through 50 and it's nothing but blue sky. It's the same thing when gold closed above its previous peak of what, 2,200, and here we are, 3,300 and change very quickly. So I expect this to be an epic run for silver. Could we still see some volatility? Absolutely. At these numbers, sure, you'll see some volatility, some bouncing around, some corrections, but ultimately, because it only lasted a day or two, literally at the next resistance levels, to me, it's not even really resistance. So yeah, I think there's a lot to be excited for in silver. I really do.
Gold rose 27% year-to-date, reaching a record high of $3,500 before pulling back and settling at the $3,300 range. But here's what they're not telling you. While everyone's distracted by gold's victory lap, the real story is happening in silver. And it's about to change everything. Silver's been suppressed for years, but it's breaking free, and the charts scream it's about to outshine gold in a historic rally. Gold is stealing the spotlight at $3,348 an ounce, but silver, trading at just $38, is the real story. This metal, critical to solar panels, electronics, and military tech, is showing technical breakouts that could signal a massive move. The silver price chart printed a 40-year cup and handle pattern, and shrinking supply could fuel a massive breakout not seen in the history of the metal. Today, we're diving into why silver could be the investment of a lifetime, guided by market expert Andy Schectman. This is about a metal poised to soar in a world questioning paper money. Before we dive in, smash that subscribe button and hit the notification bell to get the latest update and deep dives. Thank you.
Your thoughts on silver's recent price action?
Yeah, first of all, Jesse, it's always good to be back, man. You're the class of the industry. You know how much I enjoy being here, so thank you for having me back. Yeah, man, look, you have a 40-plus year cup and handle formation. From a standpoint of technical charting, technical analysis, that's as strong as it gets. Clearing 39 or touching 39, not only in spot this morning, but in the futures market last week, that's the strongest showing, as you mentioned, since 2011. The resistance that we see that it cleared was the $37 to $38 range. And, that sets the stage for certainly, in fact, I wouldn't be surprised, and I hate even saying something like this, but I wouldn't be surprised to see it go through 40, 41 this week. There's very, very little resistance at these levels, because if you look at the so-called resistance, it had traded at those levels for not more than a day or two on its way, up and down, which were very quick. And so that is, to me, not really resistance. It's mild resistance at best. You look at the gold to silver ratio, which is still massively elevated. Last I looked last night, it was 92. That's historically a massive bullish signal for mean reversion, as it's called, where you revert to the mean, where, the average price for the past 150 years, that ratio has been about 42 to 1. That's man's price. That's man's ratio. God's ratio, or the mining ratio, is roughly 7 to 1. In fact, I just saw Keith Neumeyer at the Rule Conference last week. And again, he says, yeah, it's coming out of the ground at 7 to 1. Now, you have all these fundamental drivers that people are talking about: clean tech, electronics, monetary demand. Of course, you also have the defense demand that we've talked about before. These are all tightening fundamentals. And what's really different, aside from the technical breakout, the seasonal tailwinds, the strong fundamentals, all the things that you'll read in Bloomberg, to me, is that we are seeing massive deliveries. on COMEX and on the LBMA. In fact, we're seeing big deliveries off the Shanghai Exchange. You're seeing a demand for physical delivery that is very unusual. The largest deliveries in the history of the COMEX in May, and then again in June, huge deliveries. You're talking massive, massive, massive change where you're seeing it might be the second largest. I think the one Warren Buffett delivered all of his silver to the COMEX for SLV, I don't know how many years ago. That might be the single biggest. But if I'm not mistaken, the May delivery was the second largest delivery in the history of the COMEX market. Now, who's doing all of this? And that, to me, is what's very different. You look at the LBMA, which is a T+1 settlement market, Jesse, where T is the trade day plus one settling. The third day, the bar should be moving. Well, they've been on a T+8 week settlement for quite some time now, 4 to 8 weeks, typically longer than the 4, closer to the 8. And they cite a shortage of manpower and trucks. Well, what that really is being caught with their pants down. And you take a look at their supply numbers. They have the lowest float that they've ever had in the history of the market since they've been keeping records. This is a 140-year-old exchange. I don't know how long they've been keeping records, but it's the lowest float, somewhere around 170 million ounces. So if you realize they have about 750 to 800 million ounces there, that means that the rest of the silver, minus the 140 or 50 million ounces, belongs to the ETFs primarily, like SLV, who, ironically, BlackRock and JP Morgan are the primary custodians. Don't get me down that path. But when you realize that, according to David Jensen, who does a marvelous job at analyzing the LBMA, that they're trading upwards ends of 1.9 billion ounces per day, which is 3.5 times the annual global mine supply. At the same time, it's, in this case, about 12 times the float. So they're trading paper. And what differentiates this market in both gold and silver, in my mind, you could say the same thing about platinum, is that you have massive volume and massive deliveries. And no one ever stood for delivery. So it's kind of like Bernie Madoff, who everyone thought ran a great shop until people said, we need our money. And then you begin to see cracks in the system. Well, you could argue that's where we are right now when the LBMA shifts to a T+8 week settlement from T+1 and citing a shortage of trucks and manpower. Well, what could possibly go wrong? So, yeah, I think that we're on track for further gains. I would not be surprised to see $50 later this year. I wouldn't be surprised to see $40 later this week. So, yeah, there's a lot to be excited about in the silver market. I think the fundamentals are insane. And I think more than anything, and I've cited this before, there's a lot of talk of the BRICS meeting we just had, and there was more talk of the BRICS grain exchange. And the gentleman running the grain exchange, Jesse, said, we produce and consume more grain than they do in the West, but we can't control the price. That's controlled on COMEX. But with the development of this new grain exchange, that will change. So they know what we're doing with all of the commodities, from grain all the way up to platinum and everything in between. And they've been using that against us by standing for delivery across the globe. And I believe that this isn't going to change. You take a step back and then you look at a bullish figure. And I don't mean to answer this question so in depth, but I think it deserves it after all of these years of waiting for the breakout. You look at China. They're the second largest producer in the world. David Morgan, if you ask him, would tell you they told him, the Chinese did, that they're number one when he did a tour there of some mines, but they're listed as number 2. Second largest producer in the world, and yet Sean Kuhn from Dolly Varden, if you ask him on air, he'll tell you that they're flying all around Latin America, in particular Peru, the Chinese are, buying doré and concentrate directly from the mines, disintermediating the marketplace, and sending it back, paying double what the West was, sending it back for refining in China. Now think about it. Why would the second largest producer in the world, or maybe the first, find it necessary to buy doré and concentrate, way outpricing the market for it, and then sending it all the way back to China to refine it if it was just a commodity like we are led to believe? And I think you look at the folks in Canada, some of the banks and the mining companies who are petitioning Ottawa to reclassify it strategic from industrial, and you see the moves that countries like Russia making it part of their strategic stockpile, India buying 900 million ounces in the last 5-6 years, China flying all around the world to get it, and deliveries burying the COMEX market to the lowest float in history ever, or the LBMA rather, and then COMEX delivery largest deliveries in the history of the COMEX market, seems every single month. So you're seeing what I believe is perhaps a rewriting of the silver narrative, where this game of naked shorting is an existential threat to some of these players. And I think you're seeing the commercial banks wake up a little bit to the reality that this is a game that cannot be played anymore on a naked basis, meaning shorting without the silver behind it, in order to control the price, because the rest of the world has become coordinated, motivated, sophisticated, wealthy as hell, and they know what we're doing, and they're standing for delivery. And that is how the game ends. Jim Sinclair always said, that's how you beat them, stand for delivery. Well, it's one thing when you and I try to stand for delivery and even take something off of COMEX. It's another thing when you are seeing billions of dollars worth come off the exchanges every month, when you're seeing the biggest money in the world, who is not only the biggest money, they're the most well-informed traders on the planet in what is a very sophisticated endeavor, and that is to drain the world's exchanges. It's just beginning. I do believe silver will go on a run, a slingshot run, that will surprise even silver bulls, especially when you compare it to gold's performance. It's following suit just the way it normally does. Gold leads the way. Silver slingshots past it on a performance basis. And if we close above $41 an ounce, I mean, the sky's the limit. There's virtually nothing between it and 50. You get through 50 and it's nothing but blue sky. It's the same thing when gold closed above its previous peak of 2200, and here we are, 3,300 and change very quickly. So I expect this to be an epic run for silver. Could we still see some volatility? Absolutely. At these numbers, sure, you'll see some volatility, some bouncing around, some corrections, but ultimately, because it only lasted a day or two, literally at the next resistance levels, to me, it's not even really resistance. So yeah, I think there's a lot to be excited for in silver. I really do.
Gold's been the safe haven king, soaring to new highs, while silver's lagged at $38, barely noticed. But here's the twist. Silver's not just a shiny trinket. It's a cornerstone of clean tech, defense, and electronics, yet it's priced at a 92-to-1 ratio to gold, a level so extreme it's only hit a few times in 150 years. Here's what's really happening behind the scenes, and why this moment is different from anything we've seen before. The London Bullion Market Association, the LBMA, has shifted from T+1 settlement to T+8 weeks. They're citing shortage of trucks and manpower. But that's corporate speak for, we're caught with our pants down. The float at the LBMA? The lowest in their 140-year history. Around 170 million ounces available in a market that trades 1.9 billion ounces daily. That's 12 times the available float being traded, on paper. Meanwhile, the COMEX is seeing the largest physical deliveries in its history. Month after month, someone with deep pockets is standing for delivery and draining the system. If you think that's enough, here is also something to consider in the bullish case for silver. China, the world's second-largest silver producer, is flying around Latin America, particularly Peru, buying d'or bar and concentrate. That is the semi-pure alloy of silver that has to be further purified, and they are going through the extra trouble of buying directly from mines. They're paying double what the West offers and shipping it back to China for refining. Think about that. Why would the second-largest producer find it necessary to circumvent global markets and pay premium prices unless they know something we don't? Andy Schectman, a market veteran, argues for silver's value as criminally low despite skyrocketing demand from China, India, and Russia, and a supply that's drying up fast, and says this gap is a glaring opportunity. He points to massive physical deliveries on COMEX and the LBMA, signaling that big players who've suppressed silver's price are losing their grip. The market's been blind to silver's duality as both a monetary and an industrial metal. Silver's a linchpin in solar panels, military tech, and electronics, with demand exploding. Schectman highlights that silver's mined at a 7-to-1 ratio to gold, yet priced at 92-to-1, a massive disconnect. Silver's cleared the $37 to $38 resistance, forming a 40-year cup and handle pattern, a bullish signal for explosive gains. Add record COMEX deliveries in May and June, some of the largest ever, and the market's under serious pressure. Schectman predicts silver could hit $50 this year, but if the gold-to-silver ratio corrects to its historical 42-to-1, or even the geological 7-to-1, silver could rocket into triple digits, leaving gold in the dust. That's a potential 150% plus surge. This isn't just about charts. It's about a seismic shift. Schectman argues that bullion banks have manipulated silver's price through naked shorting, selling paper silver they don't own. But now, sovereign wealth funds and central banks are demanding physical delivery, draining COMEX and LBMA vaults. This could end decades of price suppression, tying silver's rise to a global loss of faith in fiat currencies, much like gold's rally signals central bank moves. Silver could be your fortress against a crumbling dollar. Schectman sees a strong fundamental bullish case for silver with China's global silver hunt, Russia's stockpiling, and a fifth year of supply deficits fueling the fire. Silver's been ignored, but it's ready to soar. With exchanges struggling to deliver and the LBMA's float at a historic low of 170 million ounces, silver's breakout is here. This is the metal the market overlooked, but it's primed to explode.
As you've just touched on, Ed mentioned last time I spoke with him that he's seeing major signs the big bullion banks are losing control of their short positions and having to cover and go long, which could explain at least a part of the price action we're seeing now. Update us on how you see the question of manipulation in the silver market. Do you think it's coming to an end, or do you think there'll always be those forces manipulating prices behind the scenes?
Well, that's just it. Standing for delivery ends the game. When silver went past 38, Jesse, this isn't retail demand or industrial demand, as Ed Steer says, who's a very smart man who's carrying the torch for Ted Butler. God rest Ted's soul. This is short covering. I agree. You see exploding exchange for physical spreads and rising open interest and increased volatility. This all points to big players getting squeezed, as far as I'm concerned. And if major bullion banks are indeed reducing their short exposure or even starting to go long, then this is a huge shift. And it suggests that they no longer feel confident, if you will, anyway, controlling the price the way they did in the past. And they did that naked shorting, meaning, as an example, if I have 1 million ounces of silver in my warehouse, which isn't unusual, I will sell 1 million ounces short on paper, and so that I'm market neutral. One goes up, one goes down, commensurate. That's a covered short. A naked short is you just short with the expectation of the price going lower, and you cover it, and you don't ever have to. You cover it, or you don't need to cover it, and you don't ever have to deliver because the price goes the way you think. And if you're a bullion bank and you just keep shorting and shorting and shorting and shorting, you overwhelm the longs who get margin called and finally bail. But when you have sovereign wealth funds and sovereign wealth funds really being a proxy, if you will, for some central banks perhaps, their deep pockets rival those of the bullion banks and make it very difficult for the bullion banks to overrun them through margin calls. So yeah, I really do think we may be witnessing the beginning of the end of the silver price manipulation. I hate to say that and be wrong because I think these are very powerful players, but I think that it's becoming a game that has been exposed. For all of the years that they've controlled the price going all the way back to the London gold pool, there was never anyone wealthy enough, sophisticated enough, motivated enough to challenge the COMEX. The closest one to it were the Hunt brothers in 1980. But now you're seeing governments and sovereign wealth funds that are demanding real metal and real delivery. And these deliveries, to me, are, being, not only that, they're being withdrawn from the COMEX. You mix all of that in with the exchange for physical spreads widening and the deliverable supplies tightening and the increased volatility. To me, it is a classic short squeeze. And I think the bullion banks are starting to reevaluate, if you will, the wisdom of doing this. And it used to be easy money. It's not so easy anymore. And I don't know. I think that this is the kind of development that leads right into price momentum and maybe even a de-risking of the price manipulation. In other words, this is a big deal if you're on the wrong side of it. And I think if I were a board member to one of these banks, I'd say, what the hell are you doing? Time to quit this game. It's just too risky. So yeah, it doesn't surprise me that Ed would say that. And let's hope he's right, because no one really knows the real price of silver. And it hasn't been allowed to find price discovery in forever. because of the shorting. You have 8 Western banks, and this is Ed's own information. He'll tell you that have controlled the largest naked short position in the history of the COMEX market ever. And it's in silver. Why are 8 banks holding down the price is the bigger deal. And that's when we get into the military industrial complex, as you and I have talked about. But that was a game that didn't have challengers. And the challenging is standing for delivery with deep pockets. And that's when things began to change. And that seems to be the path that we're heading down right now. So I am cautiously optimistic that we may actually be witnessing the beginning of the end of the silver price manipulation.
Yeah, what a paradigm shift that would be. I think people have a lot of recency bias. It's why you get comments that silver will always be manipulated, it will always be held down. But things change, and they change a lot slower, I think, than our own human lifespans are willing to accept. We think everything revolves around the time preference that we have. But I think this could be a major paradigm shift that has happened slowly but surely. Now, if true price discovery does play out, we see silver hit $50, potentially go into the triple digits. What impact could that have on the industrial side, particularly the military applications, as you've been hinting at and as you've explained on this show? What could that do to the price of weapons manufacturing, military tech, not to mention just consumer electronics, solar panels? Could that have a ripple effect throughout the economy?
Price is irrelevant. In reality, silver's inelastic. It's an inelastic component in industrial applications, solar panels, medical devices, electric vehicles, or military. That means that, in essence, that even if the price of silver rises, manufacturers must continue to buy it to meet their performance standards, or just because it's the only thing that works in those products, and it's usually in such small amounts, it doesn't matter. What really matters in rising price, see, I think the reason they kept the price down is less to make cheap weapons, because in essence those weapons cost so much damn money that if you're putting 500 ounces in a Tomahawk missile, yeah, it would add up over time. But at that level, when you're selling missiles for $20 million a piece or whatever they cost, what's a few hundred or a few extra $1,000? It's really nothing. It's more along the lines of the control of the silver price, to me, has kept everyone out of the market. Because it's been counterintuitive in its nature, in its movements. You look at the silver squeeze crowd, who was all, really disenfranchised, watching the price come back down from $31 in 2021, when it hit $30, and then bang, you got, what was his name, the head of the CFTC at the time, who said we had to tamp down the price of silver. And it did. It went straight down, and it hasn't come back up until now. And so you have, I think, more along the lines of demand control in an asset class that is depleting in nature. Remember, we talk about right now a 92-to-1 gold to silver ratio. But Keith Neumeier will tell you it's coming out of the ground, its mining ratio is 7-to-1. So we're in a situation where, it was 16-to-1 for 5,000 years. Now it's 7-to-1, and that's because silver is found in nature in a form called epithermal, which is like epidermis, your skin near the top of the surface, and all the big deposits were found forever ago. It's depleting in nature. And so you have a situation where if you need this to make weapons, well, then you make it very volatile, very counterintuitive, and you hold the price down. So people say, what the hell do I want that stuff for? If it's not going up when there's record inflation and chaos and COVID and all of these things, well, will it ever go up? To your point, you have all of these comments. It'll never not go up, or will never go up because they can control it forever. No, that's not the case. And I think that's really the issue, is that its rise in price would signal to the world that this is something people should own, and would quickly crowd them out of available supply. And while there's good supply on the retail market, you look at the industrial bars, they're disappearing. You look at the level, as I mentioned, the lowest float ever in the history of the LBMA. And so there isn't enough supply at the industrial level, at the top level, to allow silver to run, because you attract more demand then. And gold and silver are those kinds of investments. The higher the price goes, the more interest there is in it. It's different. Normally you look at other things and see the price go and people get afraid. Not with gold and silver. When it runs, it signals, I think people make that move understanding that the dollar's in trouble, the market's in trouble. And that's why they've held it down. It's more about available supply to me than it is the cost of things. If you need an eighth of an ounce of silver in an iPhone, if the silver price triples, who cares? You still need it, and it's not going to materially change the price of the product. That's why it's inelastic. So for me, Jesse, it's not about price as much as it is availability. In a world where it's disappearing geologically, where the above ground supplies are disappearing, and that's evidenced by, as well, all of these deliveries to COMEX are leaving COMEX. Well, where's it going? Who's taking it? Why? And then if that's gone, then what? Where do you get it? We're having another structural demand, another fifth or sixth year in a row, 250, 260, 280 million ounce shortfall between supply and demand. And that might be why you see China flying all around the world as the second largest producer in the world, buying doré and concentrate, because they know that ultimately it is needed for their country, for the future. And as Eric Young, who is one of my favorite, you should have him on your show, King Kong on Twitter, I think it's YEUNG. He lives in Hong Kong. He says China is indeed doing this. They're joining the West and suppressing the price and going all around the world, gobbling up silver in ways that disintermediate the price in the market realization of what they're doing. They're using this as a tool for accumulation, as we use it as a tool to keep people out of the market so that we can build high-tech weapons and sell them all around the world. And you look at a company like BlackRock, who is the largest shareholder in PSLV, who is the primary custodian, along with JP Morgan, of SLV, the world's largest silver trust, who owns all the manufacturing of weapons. They own all the weapon manufacturers, or the largest shareholders in them. So they keep the price of silver low by shorting things like SLV, naked shorting, and on COMEX. They make the weapons because they own the weapons manufacturers. They sell them all around the world and then blow up places like the Ukraine, and then they come in and get the reconstruction contracts. It's a game of war and reconstruction, and of BlackRock controlling it all. But this is changing because you have players now standing for delivery. And so I don't care how high it goes. It's not going to materially change manufacturing because of its inelasticity, but it will if all of a sudden you just can't find any available silver, because people realize just how critical it is. It is not industrial. It is critical, and it should be. It should be at the top of the list of things that are massively important to any government in any country to secure their future.
Why should you trust this? Well, because Andy Schectman's decades in precious metals, paired with strong technical analysis of silver's price action, align with hard data. COMEX's record deliveries and LBMA's shrinking float all allude to the same conclusion. We are about to see silver reach levels never previously imagined. Experts like Ed Steer and Keith Neumeyer confirm a short squeeze, with banks covering massive short positions. The charts and fundamentals scream silver's ready for a historic rally. So, what does this mean for you? If you're holding dollars, stocks, or bonds, they could crumble if the dollar weakens, as Schectman warns. But silver? It's your chance to ride a breakout. You're not just protecting your wealth, you're seizing a rare chance to multiply it, like institutional investors capitalizing on silver's historic ratio correction. Don't wait for silver to hit the headlines. Act now to grab this undervalued metal before it skyrockets. Drop your thoughts in the comments. Is silver your next big play? Subscribe and hit the bell to stay ahead of market trends. Thanks for watching.